Have you ever been looking at a company to invest in and just happen up on the balance sheet and you're wondering like, what is going on here? Hi guys, welcome back. I'm Jamie. If you're new, please subscribe. Turn on your post notifications so that way you won't miss when I upload any new videos. You can also connect with me now. I'm on social media. I'm on Instagram at JA_Radcliffe or Twitter at JA_Radcliffe2030. Plus, you can also find the links down below in the description. Today, I'm going to be breaking down the balance sheet. Plus, just going to pull a random one from the Jamaica Stock Exchange so that way everything I'm going to talk about, I can actually put it in perspective. So, let's get into the video. Oh, and don't forget, hit that like button, guys. The most important thing that you need to know about a balance sheet is that it must be balanced. But jokes aside, the balance sheet should be balanced for real though. The balance sheet is also called a statement of financial position, and it is done at a particular point in time. This is done to show the value of the business at this point in time. Unlike the income statement that is geared towards showing the profitability of a company between a particular period, so let's say January to December. And it is because of this, when you're looking at a balance sheet, you will notice that it is done at a particular date. The balance sheet is broken down into two main sections. You have your assets and your liabilities. Now for the assets, it's just like you owning your car, your furniture, your house, and so on. These are the things that a company would put on their balance sheet. For the liabilities, you would need to show like the loans that you took to acquire assets, whether you have any credit card debt, or even if you owe your suppliers. These are the things that you're going to put into the liability section of the balance sheet. Equity, another crucial part of the balance sheet, is pretty much rolled up with the liabilities section in any balance sheet. While the balance sheet has two main aspects, assets and liabilities, these aspects can be further broken down into current and non-current. For both assets and liability, when you're talking about a current asset or a current liability, we're talking about a liability or an asset that is to be realized within the next year or within the next 12 months. So if it's an asset, you're expecting to use it or to get it back within the next 12 months, or if it's a liability, you're expecting to pay that portion of the liability within the next 12 months. When you're looking at your current assets, you expect to see things like your bank, your cash, your inventory, your accounts receivables, and so on. And your accounts receivable is something that you're expecting to collect over the next 12 months from whosoever that you as a business owner supply with your goods or services. Non-current assets, on the other hand, are assets that you expect to be in the business for over a year. So for example, fixed assets and so on. So if the company bought a building, we know that the building is not going to pretty much shake down or fall down after a year. So you're going to list that as a non-current asset. Current liabilities, on the other hand, will entail things like your payables to your suppliers, your loans, or any other expenses that you expect to pay over the next 12 months. Long-term loans normally make up the bulk of non-current liabilities. If you have a 5-year loan, you would take out the 12-month portion and put the rest into the non-current liability section. Now, to be honest, if you guys are like me, it's easier to learn when it is that you see an actual balance sheet and we can see where everything really comes down. So what I've gone ahead and done is to actually download JetCon's financial statement. It pretty much just come out the other day. So to show you this, I'm going to just go over my computer and we can see how JetCon balance sheet is broken down. And if you guys are doing it yet, just go ahead and hit that like button, alright? In front of my computer now, guys. So right here we have the statement of financial position, or the balance sheet for JetCon Corporation. Not really go through anything. Choose this company. Just really and truly choose the first one that was on the Jamaica Stock Exchange website. So this page 8 of JetCon's financial statement for December 31 is their balance sheet. So as I said first, you notice that the balance sheet is always as at a date. So right here, they're saying that as at December 31st, this is the value of JetCon right here. This is the overall value of the company. Now, if you look here, you notice that we have the assets up here. We also have our liabilities down here. And these are the two main sections of any balance sheet. And if you notice here, we have equity. Remember I told you that equity is rolled up into liabilities. So if you notice here, we have total assets. And then down here, you have total stockholder equity and liabilities, where it shows you everything that the company has. Now, when we look at the assets, we have both current assets and non-current assets. For the current assets of JetCon, we have inventories, receivable, cash and bank, parent company. So these are some of the things that you would look out for when you're looking at a balance sheet. This particular entry here for parent company is not something that you would always see on a balance sheet, because what JetCon is saying right here is that their parent company owes JetCon 8.3 million. So they're looking at that as an asset that they expect to get within the next 12 months. Non-current assets. Remember I said that non-current assets is normally a fixed asset and so on. So JetCon has their property, plant and equipment, their lease, right of use asset, and investments. Now, this investment is some long-term investment that they don't expect to collect back within the next year. So whatever the case may be, if we check note 11, not going to check the notes right now, but we should see whatever it is that this 66,000 represents. Now I know some of you might be wondering what this really is. Pretty much is just the information for the place that they are renting, how much it values, because they have to recognize it on their balance sheet now based on the new accounting standards. Now down here we have our equity, which shows our share capital, our retained earnings and our capital reserves. Now retained earnings is where everything from your income statement comes over to your balance sheet. So whether you have a loss or a profit for the year before, it will be rolled up into this figure right here for your retained earnings from your income statement for the last year and every year going forward. Moving down to our liabilities, as you can see, we have our non-current and also our current liabilities. Non-current liabilities, we have our long-term. As I said before, these are normal long-term debts that the company has that is not going to fall due within the next 12 months. We also have the right of use liability right here, which is pretty much the same thing as the right of use asset lease, right of use asset right here. It's just that they're recognizing the liability portion, because remember, JetCon does not own this particular lease that they're recognizing on their balance sheet. Now we have our current liabilities. They have their payables. Normally these are suppliers that they owe and they need to pay them. Right here we have our current portion of long-term liabilities. Remember I said that, when you have a loan, if the loan is about 5 years, you have to recognize the amount of the loan that you will need to pay in year 1 as a current liability. So for this long-term liability right here, this particular portion used to be a part of that in last year's financial statement. And here again, we have our right of use liabilities, which they're saying that they're going to pay 50 million this year as it relates to their right of use asset. Now guys, as you can see here, the balance sheet is not that hard. Some balance sheet might have a little bit more information on it, but it's the same thing at its core. Because if you look at any balance sheet, you're going to see these two big items, your assets and your liabilities, as well as when you break it down, you have your non-current and also your current, whether it be assets or liabilities. So thanks for watching guys. If this video helped you any at all, please hit that like button. And if you're not subscribed, please subscribe, turn on your post notifications. That way, once I drop any new video, you'll be notified. Alright? So until next week, people. Bye bye.